The Absa Group has reported an almost threefold rise in its annual profit. We've seen a massive recovery across the banking sector, and Absa is the latest banking group reporting a significant rebound in its return on equity for the year to end December 31. A massive decline in bad debt charges prompted by the COVID-19 pandemic also drove a rebound in Absa's performance. Credit impairments dropped by 59% to just under 8.5 billion rands. Joining us now is Absa Group Chief Financial Officer Punki Modise to talk more about these financial results. Thank you very much, Punki, for joining us. Let's talk about how these financial results are actually comparable to the previous year.
Yeah, thanks, Xolani, for having me. I think to your earlier point, a lot of the, improved performance that you see is largely as a factor, of the rebound, that we saw in the broader macro environment. I think when we hit COVID in 2020, we actually thought that, the macros were going to turn out worse than what we, anticipated. But fortunately, I think in 2021, we saw a much more, accommodative macro environment. And I think the lockdown restrictions also, were eased somewhat during 2021. And that largely is what drove, our improved performance outcomes. But over and above that, I think the quality of our earnings, which is measured through pre-provision profits, was also quite strong. And really, that was a factor of, the interest rate hedge that we have as a bank, but also I think the dislocation that you see across the environment helped, in particular, our corporate and investment banking business. And I think the risk management capabilities that they implemented over the past 2 to 3 years have really stood us strong and helped supported the growth that we saw. So overall, I would say it's a story of two factors. It's the macros, but also I think risk management, in particular in the CIB business, was quite strong. And I think from a consumer point of view, we also saw consumers really, engaging, in particular on the secured side of business in terms of, buying cars as well as, buying houses. And that has contributed towards the strong performance that you see.
Punki, let's talk about Absa's views on the inflation trajectory in South Africa in the coming months and the impact it might have on consumers.
Yeah, I think the best place maybe to start is obviously when we exited 2021, there was already inflationary pressures, coming through. And you saw those coming through, I think, globally. And then, unfortunately, I think the events, in Russia and the conflict, that's taking place there between Russia and Ukraine is not helping. If anything, we think that it's accelerating, the inflationary pressure that we are seeing. So I think to a large degree, though, if you take it to, the South Africa as well as, Africa as a continent, we've got an opportunity within that, which to a large degree, I think that the Minister of Finance spoke to during his budget speech when he spoke about the fact that we've seen, a surge in commodities. And my sense is because in Africa we're a commodity-rich continent, we've got an opportunity, to weather the storm. And I think that will insulate us, somewhat in terms of inflation. But yes, inflationary pressures are real and they will impact on consumers, I think, as we go forward.
Let's talk about the Reserve Bank Monetary Policy Committee's decision coming next week, Thursday, and how that will impact on consumers. We've heard from other banks saying that definitely we are expecting an increase. Let's talk about that and what Absa's forecast is for next week.
Yeah, so, we also are forecasting that interest rates will increase, but we think that they will increase gradually, through time. So there won't be like a sharp increase that's going to come through. And our sense is that, from a consumer affordability point of view, it is likely that it will reduce, the consumer's ability, to spend as we go forward. However, I think if interest rates, come through in a gradual fashion, customers have got a strong propensity, to change and, adjust to the changing interest rate environment. And our sense is that we've seen that, we've got customers that are highly, resilient. So in my view is, yes, interest rates will increase, and I think customers will continue to be able to afford the rise in interest rates. And also from our side, when you think about risk appetite, to a large degree, most of our growth is also, informed, looking through the cycle to see where it's going to take us, and then we provision for that appropriately.
You are also of the firm view that we are looking at a fifth wave of COVID-19 infections next month. You have followed on the health minister's predictions as well. What impact does that have on the bank? And what is the bank's views about what we are all waiting for, to hear from the president whether the national state of disaster is going to be suspended or not? Should it be suspended by the president since it's been there for 2 years?
Yeah, thanks, Xolani, for that question. I think maybe to say we are of a firm view, it might be a little bit strong a statement. I think from our side, we are largely led by, the Medical Research Council and the work that they continue to do around excess deaths as well as, predictions in terms of where the next wave, or when we expect the next wave to come through. We, from our side, when we look at our insurance business, we largely look at, their predictions, and we take those predictions and we filter them into our models. And then through that process, then we come up with provisions. Unfortunately, as a bank, we've got no ability whatsoever to predict where when the next wave is going to come through. We are reliant significantly on the government as well as the data that's coming out of the Medical Research Council. So in terms of where the government is going, our sense is that there is a potential fifth wave that will come further downstream. And from a provisioning point of view, we obviously need to always look out a year, when we provision. We then utilize that data to make sure that we've got sufficient provisions to honor any claims that may come from customers.
We saw the economy growing by 4.9% in 2021. Do you have a forecast of how 2022 is going to pan out, and what factors might actually lead to that performance?
Yeah, we do have, an economics research, department in the bank that looks at that. And at this particular point in time, we expect GDP to grow by about 2.1%. As we go forward. However, my sense, and this is just my own personal, optimistic opinion, is that we can actually do better, in particular given the fact that, there are elements within that which are playing in our favor, and we just need to make sure that as a country, we continue to double down on those elements, because they will give us the upside, I think, that we require ultimately. And the elements largely that I'm talking to is this commodity surge that we continue to see. And I think it will give us a better, outcomes ultimately at the end of the day.
Punki Modise, Absa Group Chief Financial Officer, thank you very much for your time. Quite optimistic about the economic prospects for the country in 2022.